This is On the Money, where Peter Switzer is helping you make more. We've got your questions coming through on 13 12 83 and emails as well. We've got one that's up on our screen, so we thought we'd invest in the best accountancy advice from Accountancy Invest. Lance Lay joins us on the line now. G'day, Lance.
How are you, Ed?
Good, my friend. Good, mate. We thought we might be able to help us out with the answer here. The email's from Jason in Botany in New South Wales, and he writes, I'm wondering if I can bank my business revenue against my home loan and then redraw it when I need money. And he also asks, can I claim as a business tax deduction any interest paid on my home loan related to the business?
Okay.
Whoa.
So, Ed, I think the question really is, I've got to clarify, is he a sole trader, partnership, or is he actually trading as a company?
Yeah, let's do both. Let's imagine he's a sole trader or a partner, all right? And then contrast it if he's a company.
Okay. So if he's a sole trader, then obviously his business would be operating under his personal ABN. So under the personal ABN, I mean, because there is no legal distinction between himself and the business, because he is the business, though he has an ABN, so that obviously that's designated as business revenue and not personal revenue. So in that instance, Peter and Ed, what he could do is, there could be he could bank that money. It could go into his account. In that example, he could offset it against his home loan, perhaps save a bit of interest there, and then, of course, draw it back down when he needs it. That wouldn't be an issue, so long as you could re-identify or clearly identify the flow of funds to and from, I suppose, his business account.
Yeah, that's the important part is to record what you're doing. So if you're ever investigated, it'd be quite clear that you drew, say, for example, you put 40,000 in, you drew out 20,000, maybe for a loan to the business, all that kind of thing. If it's recorded, then it becomes a legitimate business action.
Correct.
Okay.
Correct. It needs to be properly identified. What's business and what's then private. So then on a company, so that was the other thing.
Yep.
The next thing would be a company, right, Peter?
Yep.
So with a company, that's a separate legal entity. It's a separate to the owner of the business, who would be a shareholder. In that instance, because it's a separate legal entity, you've got to treat it like a different person altogether who has his own right.
Right.
And so therefore, to commingle the funds is a little bit more, I suppose you need to document it even better in the sense that if you take money out, it's either got to be wages or a loan. You can't just take money out of the company willy-nilly, put it into your home loan, offset that against an offset account and save some interest, and then put it back into the company as you would like. You need a properly documented loan agreement, Peter.
Yeah.
And what would happen is if you had a balance where you overdrew and you owed money to the company, let's say, at the end of the year, 30th of June, and you didn't have a loan agreement, what would happen then is the tax office could rightfully deem that as actually a dividend.
Yeah, an income.
Exactly.
Yeah, so what you're saying, it's much more complicated if you're operating as a company, but if you're a sole trader or a partner, it's less complicated, but you have to keep records, right?
Correct.
All right, now the next part of the question is, let's imagine they whack 40,000. They're a sole trader. They put 40,000 in. It's helping to reduce their loan. Then along the way, they thought, hang on, I do need to actually borrow some money for the business. I'm going to borrow 20,000. So on your offset account, your loan goes up by 20,000 because you're drawing 20,000 out, right?
Right.
So that 20,000 you draw out, then does that become a tax deductible expense?
So, Peter, if he put in $40,000, right, and let's just say he put that in as against the account, and then, of course, he would be like loaning himself money, if you like, right, to repay that. Now, what's important as to whether an amount that comes out of a loan is to the purpose to which you use that money. So let's say he drew $20,000 out, and he drew that out to buy some machinery, to buy a work vehicle. Then that money, that interest related to that money becomes tax deductible.
Yeah, I thought that could be the case. So it's a good question, isn't it? It's some people, work their butts off and just don't think outside the square. Obviously, it's Jason's, and Jason from Botany has actually thought through the circumstances. So, and look, I think what Lance is also underlining is the value of having an accountant who can answer these questions for you, and then really good ones who actually even think through the issues for you and actually bring them up.
Excellent work. All right, Lance, thank you for chiming in to help out with that one. Appreciate your time, mate.
My pleasure, guys.
Lance Lay at Accountancy Invest. I love the way our listeners' minds think, taking us in different tangents. Good stuff.
Yeah, and I think this is the value of this forum, which we call On the Money, because it's not just the fact that questions are being asked. It opens up our entire mind to the potential of how much more money you could make by just being informed.